Gotta move this here, gotta move that there. I have to click this button. All right, good morning, Komatelevu. How are you? Jumbo, Ohio, Nihama. Hello. Oh, yeah. How's your mum? G'day, mate. Shall I throw a pip on the bobby for you? Ripper. Good morning. How are you? Oh, I'm great. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I like all things money. I think money is the root of all good. Yes. So I like talking about money, but money leads to business. Money leads to investment. Money leads to comfort and satisfaction, and sometimes even self-worth. And you're like, man, I don't understand that. You know, money makes people do weird things and bad things and greed and evil. And I'm like, whoa. Money is a function of productivity, and productivity is a source of self-worth. I've been digging holes for days, and it's satisfying. Anyways, whatever. Money. Good. So if you want to talk about Forex, if you want to talk about macroeconomics, if you want to talk about global money flow, if you want to talk about the stock market, the bond market, if you want to talk about cryptocurrencies, if you want to talk about metals, I'm into it, baby. If you want to talk about real estate, if you want to talk about starting a fund, structuring a fund, managing a fund, I love all that stuff. Yeah. If you like scalping, spot, swing, carry, position trading, love it. We could even talk about structured finance. Yeah, I mean, look, there's all kinds of things we can talk about. Love it. I don't like spending money. I like making money. So if you like to talk about making money, that's all I got, actually. My wife complains. She's like, that's all you ever talk about. I'm like, that's all I know. Sorry, I didn't know the guy from Dancing with the Stars died. I just didn't know. It's not something I track. But anywho, onshore or offshore, it's all good, man. Let's talk about money. Let's talk about you and me. Let's talk about all the good trades and the bad trades that may be. So if you look at the description below the video, there's links to many resources. I'd like you to look at them and click on them. It'd be great if you left a review for my book on Amazon.com. The more reviews that are there, the more I feel like I should write a second book. So that, because if nobody cares about the first one, then I got better things to do to write a book that nobody cares about. But I have 3 books right here. 3 books. I even have the name. I've already done the structure. I just got to find the time to write them. So, but if you care, I'll do it. If you don't, forget it. So express that desire. See, it's all about you, not me. Express that desire by leaving a review on Amazon.com. Anyways, there's a link to FX Bootcamp. Look, it's good. FX Bootcamp's good. FX Bootcamp, in my humble opinion, is designed and structured to make the world a better place. Okay? Oh, Javi says, stop begging for reviews. You do that every day, and it's a tad annoying. Okay, sorry. The FX Bootcamp makes the world a better place because it helps you become an independent foreign exchange trader. That's it. You're not just a successful trader, but independent. You don't need anybody. You certainly don't need me. And that's what it's designed to do. There's Quant-Box. Helps you understand the macroeconomics around you impacting the markets, including the stock market, the bond market, gold, oil, silver, major pairs like dollar pairs and yen pairs, cross pairs. Reads the Commitment of Traders report for you and organizes it in a way that you understand, including risk on and risk off baskets. It looks at probabilities and helps you identify things that were likely to happen. But what about the things that are happening that were not likely? Those out of position outliers. Well, that's probably tomorrow's good trade. Oh yeah, it does all that for you. That's quantbox.co. There's traderswade.com, an ethical, trustworthy foreign exchange broker who not only has fast execution speeds, narrow spreads, huge swaps, but the broker that earned my loyalty and respect through their behavior in real world duressed markets. These stressed, duressed markets put huge foreign exchange brokers out of business. But Traders Way remains strong. And I'm like, oh God, that's awesome. So there you go. Tradersway.com as well. All those links are below the video. Check them out. Check them out. It's all good. Those are all good resources. I was just looking out here. This is from last night. We were doing this in a day trading group last night, but I jumped out to the end of 2024. And look at that. The market has interest rates around 3%. Isn't that interesting? So in the next 18 months, we'll have a presidential election, and I guess interest rates are going to be 2% lower than they are today. Cool. Sky Killer said, I'd buy your new book if you wrote one. Cool. It would not be an $80 book like my current one is or was. They sold it for 10 years at $80 or something. Really amazing. But remember, it's not my book. I had no idea. But I was new. I never wrote a book before. Didn't know how the market worked. I just look, Wiley Publishing is the biggest financial publisher in the world. It's an honor to be a published author. So they paid me, honestly, I think it was like $5,000 for the manuscript up front. No, $5,000 up front, $5,000 when I wrote a manuscript, and that's pretty much it. I think that's right. I can't even tell you. And then a small royalty, and I mean small, like 5%. So I'm earning like $4 a book or something. You know, so I spent more on the launch party than I've ever earned on the book. So basically, I didn't earn any money. So my thought on the second, third, and fourth book, which the 3 books are a series of books, so I want to write a trilogy. Why not? Right? Seriously, why not? So I want to write a trilogy, and I want to price them kind of the same way. I won't make any money. But that means there'll probably be $25 a book instead of $85 a book. And I think that's cool. Interesting, huh? All right. All right. So not a lot has changed since last night. Aussie's given some. Let's go into a more sensitive look. Let's get in the weeds. Okay. Yen was strong and then it weren't. We have a Fed meeting, we have a BOJ meeting coming up. I believe it's Thursday night / Friday morning. And that's going to be interesting. I don't think there's a policy change coming at that meeting, but we do get to meet the new team. That's cool. And I would suppose an adjustment or end of yield curve control by the end of the year, but they want, I don't know. We'll find out. I mean, like right now, it's all speculation in the form of guesswork, not analysis. Yeah, Richard, watch last night's video in the day trading course. We went through the next 2 meetings, I think, and then we went out to the end of the year and discussed it in great detail. Yeah, it's all been done. All been done. So anyways, today Aussie has remained weak and Euro has remained strong and Kiwi has remained weak. So last night, one of the things we looked at was Euro Kiwi and Euro Aussie. Anywho, so if we drop into this sucker, look, not a big deal, huh? Not a big deal, but got us to that next level, and M5 is okay, but I'm much more interested in R3. Here's the commitment of traders report, by the way. This is how Quant-in-a-Box displays it. I know, right? Super pretty. But I want to go here. Okay, yen weak, yen weak, yen weak, yen weak, yen weak, yen weak. Wow. Holy smokes. Okay, Euro Aussie up only 1/3%. Euro Kiwi kind of flat. So not even that big of a deal, right? But look at here. We're looking at things like, so we're looking at bullish trends here. Okay, Euro, dollar, Euro, Aussie, Euro, yen, Euro, pound, German stock market, Euro, Kiwi, Euro, CAD. You get to see the theme here? You're seeing it? So last night in the day trading group, guess what? We went to the Euro scan. Euro, 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 right? Buy Euro, buy Euro, buy Euro, buy Euro, buy Euro, buy the German stock market, buy Euro. And Euro yen up, cool. Euro Aussie up, cool. Euro CAD up, cool. Euro pound up, cool. Euro Kiwi up, cool. Euro dollar up, cool. DAX, flat. Okay, notice what? There's no Euro Swissy? Yeah, and Euro Swissy is flat the other way. Cool, well, good to know. See, look at Euro Swissy is actually negative. Don't do Swissy. Cool. You see? Lovely. Okay. Richard's like, it makes sense. Of course it makes sense. That's the thing. It's not like Quant-in-a-Box has an opinion. That tastes so good. Okay, we can do that in a second, Grace. Yeah, keep that. If I don't answer that, I want to go through the charts, okay, Grace? But if I don't answer that in the next half hour, then ask again, okay? Okay, cool. So Euro Kiwi, oh, I got it here twice. Okay, it can go higher, covered that. Maybe this one here. I remember doing this now. It's so stupid, isn't it? It's so stupid, but I remember doing this. Where's my drawing tool? How many people here remember doing this back in June and July of last year? So funny, I haven't really opened the chart since then. It was falling and falling and falling and falling and falling. We were at 129. And I'm like, dude, can you even imagine this going all the way up to 133? No way, dude. No way. 132, then, right? And then to 133.5. Oh my God, 400 pips. I can't even imagine a 400 pip trade. And I'm trying to break that. So anyways, check it out. We're at 150 now, guys. Okay. Yeah, 2,000 pips. It's just funny. I really haven't opened this chart in that long, but I remember doing it now, and it was unfathomable. You couldn't fathom it, huh? Do you know what a fathom is? It's like plethora, right? Remember the Three Amigos? Hey, F.A., do you know what a plethora is? Do I have a plethora? Anyways, I'm just trying to show you that that's a mind bender. It's a mind bender, but it's happening. Could it be that you are playing mind games with me and you are upset about something else? Remember that one? And you were taking it out on me? Anywho. Okay. So anyways, amazing, huh? Amazing stuff here. So there you go. It takes some time, but that's how there's 2,000 pips there. It takes some time. Oh, show. So don't focus on this being sort of right or wrong or something. The way that you should study a chart like this is price action. Go through it with your mind. Remember, in my book, I talk about your mind not knowing the difference of doing a live trade or doing a rehearsed trade. It doesn't know the difference. Okay. So you can go through this trade and say, how could I have, or how should I have traded this trade? And going through it is a real experience, even though you're not actually trading it. You are getting the experience. Okay. And so at what point, for example, should you have turned bullish? Remember, it was bearish for a very long time. Should you turn bullish here? No. Should you turn bullish here? No. Here, maybe. Here, for sure. Okay. Now what? Do you like the moving average? Do you not like the moving average? Or are you using price action? Now, price action, remember, in the price action course, I teach you all this. Cool. And you get these types of entries. Okay. Right? So you're like, okay, the moving average might be helpful. Do you notice that it's cleaner when there's two moving averages? That's why I have the 55, because you're like, Well, it's not always using this 21. No, but if I had a 55 here, you get this scenario of, okay, they're crossing, and then you kind of get like this kind of thing going, right? And you're like, ooh, buy between the moving averages. Oh, yeah. You got to read between the lines. And you're like, okay, cool. So maybe that's helpful. But then notice, like, this is an entry. Where would you put your stop? Here or here? Okay? Higher high. Okay? That kind of stuff. There's that. And then there's this. Okay? So this was, right? Higher high. Now you're here. Higher high. Now you're here. Higher high. Okay, now you have support identified. Okay, the lowest low. Boom, higher high. All right, that's what this is doing here. Boom, 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 boom. There's your guesstimate for the higher low. And now the question is, will it make a higher high, higher low? Or will it make a move like that? Well, that's what we're trying to figure out, and that's what your trading would be. So if it made a higher high, then what? Well, then you circle out all this. Oops, so let's get just rid of that for clarity. Okay, so if it does make a higher high, then we'll drag this across, and that'll be our guesstimate in the future. So therefore, if it does make a higher high, we're going to go like this. And you want to, this is how you want to practice trading. Throwing down a trade to see if you become profitable is not the right way to trade. It's not the right way to learn how to trade. It's not the right way to practice. You are gaining nothing. You're just wasting time if that's how you're doing that. Oh, I got to meet with lawyers today. I got to meet with lawyers tomorrow. Lawyers! Sorry, I just got a meeting reminder. You guys like meeting with lawyers? Talk about inflation, huh? Hang on, I'm trying to get my phone to charge. It's not charging. There it is. Whoa. Sensitive. I am still super excited. I talked about it last night. I thought about it all last night. I did more research last night. I set up meetings with lawyers last night. I woke up this morning still thinking about it. I really want to start a personal endowment fund, or set up personal endowment funds. I guess it's more like set them up for you. I just have this, I don't know why I got it. I just can't let go of it, but I want to set up endowment funds. Your money should live until you're very, very, very old. That's it. I'm sick of this idea of people live so long now that they run out of money. They live longer than their money. And I'm like, why? How can you live more? How can you live longer than your money? Your money can live forever. Talk to Rockefeller. Rockefeller's richer now than he ever was. But he's been dead for 150 years. Like, why can't a regular person have something like that? It just bugs me. You should hear me. I was on Sky Radio back in the financial crisis. And this is when money managers and hedge funds and all these guys were managing people's money, managing grandmother's pearls and the, kids' college savings accounts and people's retirement accounts. And, I was still a young gun back in 2005, 6, 7, 8. When it came to finance, I was out of VC stuff, but, I was doing investment stuff, right? Like trading. I was a trader. So I had made that transition. And up until about 2005, 6, 7, 8, I just thought professional money managers were really smart people that managed your money and protected you from your downside risk. I thought that's what money managers did and wealth managers. And they had all these fancy degrees from fancy universities, and they worked at these big name firms. And then when you meet with them, and I knew a lot of these guys, they're driving like BMW Brabus cars. I'm like, dude, you have a $400,000 car or whatever it was. I'm like, what do these guys do? They must be like gods. And then 2007, things fell apart. I was perfectly positioned for the whole thing. And then I looked around and everyone around me lost their shirt. And I'm like, well, what the fudge? Didn't you have a wealth manager in place? Wasn't your money in a hedge fund? And the answer to all that was, yeah, I had a wealth manager. I had a hedge fund manager. I had an investment advisor that did nothing, didn't see it coming, and did nothing when it happened. They just stood there and we all stared at it like a car accident. And I'm like, well, I was so amazed and so upset by it. I every once in a while I look for this recording and I can find it, but I should find it. I should try to find it again and play it for you. I was so mad. So again, I can't. This goes back a long time. If we've just gone through COVID and nobody saved your money, helped you save your money, or you hired people to save your money and they didn't, then once again, this is like not my first rodeo. This is about my third recession. And I'm like, dude, I need to do something. I need to do something. Yep. I can even see like starting a board of advisors. Remember my professor at Harvard for managing endowments, he managed the endowment for the museum, the Metropolitan Museum of Art in New York City, the largest museum endowment in the world. I'll put him on my board, you know? Can you imagine? Anyways. Can't let go. I'm a bulldog. I'm a Georgia bulldog. I think that's the first time I ever said that. I'm a dog. Really? I don't know if I'm a dog. I'm more like a rambling wreck from Georgia Tech. Take a look at the stock market. I wonder if I can find that. Sky Media. Is it going to pop up? No. Probably have to find it in Google. That's why you save things, right? You're like, remember that interview from 14 years ago? Ah, I found the release to allow it to be publicized. That's interesting. Guess I'll have to just search for the MP4, right? MP. No, I guess it's MP3. MP3. It's not in the. Oh, it's MP2. I'll see if I'll find it. You guys might. Oh, here's testimonials. Oh, that's fun. Sorry, I know I'm babbling away. Huh, amazing. No, can't find it. It's somewhere. I have it somewhere. It's on one of the websites somewhere, locked. Interesting. All right, I'll come back to reality. Sorry, I didn't sleep much. Where would it be if it wasn't FX Bootcamp and it wasn't my personal? Wow, I have a lot of drone footage. Huh, interesting. I found an article I wrote for Futures magazine. Forgot about that. All right, so anyways, I'm back in the world. Sorry. I didn't sleep enough. I know. Sorry. Hey, man, I apologize. Don't be so rude. There'll be... You know, there's a sad thing. My dog's dying. It was really sad today. She doesn't want to eat. She doesn't want to walk. She doesn't want to go for a walk. We didn't even leave the property today. And it's so sad, but I catch her just staring at the wall and stuff like that every once in a while. But then I catch myself staring at the wall. My wife came downstairs and I'm standing next to the toaster and the toaster's on. It's like an air fryer type toaster. It's on. It's making all this noise. And I'm just standing there and she's like, "Are you cooking anything?" And I'll look at her. I'm like, "No." And there's nothing in the toaster. There's nothing. I'd already made breakfast for my daughter. Took it out, but didn't turn it off. And I'm just standing there. I'm totally lost in thought. Just standing there like my dog, staring off into the corner with the oven on, doing nothing. She's like, "What are you doing?" "What?" Sometimes I don't come out of my meditation. So anyways, here we are for the S&P 500. Remember, if it's a bullish week, our upside target is 42. Downside target is 41. Really, it's a little lower than that, 40.80. Hey, what's up, Darko? Okay. Oh, yeah. So, look, I think this week in the S&P 500, we have 33% of the companies reporting, roughly, this week. So this week is all about earnings. Coca-Cola reported this morning. I'm not sure if you caught that, but here's what Coca-Cola did. And by the way, this is why I'm tired. I'm resting my head and I'm tired already. Coca-Cola came out. Basically, they shrunk all their drinks and raised prices. And sales were good. Profits were good. They did fine. So, Bed Bath and Beyond went out of business last night. So they are going to shut every store down within 2 months and lay off 14,000 people. Stock is down 40% this morning. Yeah. From 50 cents now to 17 cents. I guess that's not 40%. So it must have been even less than that. It must have dropped from 35 cents down to 17 cents. Anyways, Bed Bath and Beyond. Okay, so anyways, this is your opportunity. If you're going to be a buyer of a dipper, it's probably in the next couple of days. If you're a buyer of the dipper. So I'll just extend this out. Like, this work isn't new. You've known this for 3 weeks now. I've drawn this area in here as the potential buy zone. Okay, so we just wait yet another week. And ideally, this 41 holds if you're a bull, and we're on our way to 42. Yeah, Darko's talking about consistency. That's the hardest part of the gig, isn't it, Darko? I really don't care about people's strategy per se. Strategy meaning the technique of which you trade. And so I know, Darko, you've been learning how to trade volume and flow, which is great. Using ladders, great. Sweet. I probably don't even describe it right. It's because I don't know anything about it. Cool. And if that works, it works. If you use different types of strategies, more like what I do with a mix of price action and pivot points, great. Someone else could be a pure Elliott wave guy. But then, like my buddy that uses, he uses private deals with banks. Okay. So his job is deal flow with banks. And they're not consistent, and not every deal is worth taking. But he's doing, dare I say, 3% a month. He's got to find the deal, because literally it's a contract with a bank. It's a foreign exchange. Isn't that cool? Like, it's Forex. It's just like what you and I do, except it's a contract with a bank, a written contract. Here are the terms. Here's the upside. Here's the downside. This is what the terms are. This is when it'll expire, and you will make 3%. Maybe it's more like 5%, but then you got to hedge and all that kind of stuff, so that you can have that 2.5 to 3% output after your cost of hedging and stuff. And it's inside a contract. And you're like, whoa, that's cool. So now you sign the contract and you place your hedges, and you're like, oh, well, in the next 42 days, I will make 3%. Well, you're like, ooh, that's an interesting way to trade Forex, isn't it? Because now the consistency is there where, well, you would only do the deal if you knew you're going to make somewhere between 2 or 3% in the contract, priced in. Like, that's cool. And then the whole point of my income fund is consistency. 1% a month forever. And then it sounds nice, right? But then you're like, if you've ever been a trader, you're like, ooh, really? That's pretty good. Actually, you're thinking about it like, whoa, that's neat, right? That's neat. That would be good if you could do that. If you could show for 5 years in a row, for example, every frickin' month, 1% or more. Then you're like, wait, that's amazing. Yeah, but it's the consistency that's amazing, isn't it? I think that's what you want. Bumpy says easier said than done, right? Yeah. Well, but that's why you like imagine though a fund that's designed to be consistent, not necessarily rewarding, right? Like, look, if you're trying to make 40% a year, you got to take on a lot of risk, right? But if you're trying to produce 1% a month or more and you're focused on the consistency, now it's portfolio construction. Can you engineer it like a true hedge fund? And that's different. But what we're talking about is you got to be focused on the consistency more than that reward. You got like there's a consequence of the consistency, right? Well, okay, yeah, Citadel does it in a different way, but yes. Okay. Okay. Anyways, neato. To me, the biggest thing is we all can make slightly different decisions and be profitable. Okay, but you have to know what the decisions are, and like one of them is upside versus consistency, right? That is it consistency or NC? Anyways, whatever. So like if you're George, if you're the Soros fund, okay, 1 year he might make 1,000%, and the next year he blows up, right? George, if you're setting yourself up to make 1,000% a year, you're not going to get consistency. So it's like you got to choose what you want in your portfolio, right? And I'm like, well, I think it's interesting if you can engineer consistency. And so like, how would you do that? And one part of my fund, what I would do is I would go into those private, okay, okay, I'd go into private contracts with banks. These are deals not available to public. The bank wants to balance their risk portfolio. And so they're like, every once in a while, they'll write a contract with a hedge fund. And they'll say, our risk portfolio is out of balance. We need you to take the other side of this trade for us. And I'm like, okay, what's the trade? And they're like, we have too much exposure to Hungarian francs. I know that's not what it is. I always call them Hungarian francs. I don't know why I picked it, but HUF, okay? The Hungarian currency, there's some import-export deal that the bank is financing, and then something went wrong with the deal, and it's going to take an extra month to close. But it was all the contracts were signed for delivery on a certain date, but something went wrong. There's a delay at the border or something, right? So anyways, it's delayed. And now the bank says, well, we're worried that the value of this Hungarian franc is going to fall over the next 30 days while we wait for this to clear. And they can just say, we want you to take the other side of the trade. We just want to clear our books and all this kind of stuff. And they're like, you handle this, whatever, and we'll build into the contract a 3% profit. So just take it off our books. We'll zero out everything. The bank now has zero risk on the deal. And now you got to then handle it, take the Hungarian francs, and then you do what you need to do. And now you would look at it and say, well, our analysis of macroeconomics shows that like this is more likely to go up than down. Remember, the bank's not a trader. They're trying to neutralize risk, and they may not know these things. They just want it off the books. And we look at it and go, oh my God, this isn't an uptrend. And we looked at seasonality for this, and it seems to be more up than down. And it's doing a lot with, dealing a lot with Western Europe economies, which are also kind of in an upward momentum. So we're like, we'll do this. And in fact, we may not even need to hedge it. We'll just take it off the books. It goes up over the 30 days. Winner, winner, chicken dinner. And we make 5% on the deal. Because remember, it's not leveraged. And you're like, boom. We took 5% out of that in 30 days. And all we had to do is watch the market and make sure it stayed within our range. And if it started falling, we add a hedge. Now the hedge has a cost, but then we lock it in and we only make 2.5 because it fell a little bit. Now we're worried it's bearish, and then we put on the hedge, which has a cost and whatever, right? You see what I mean? And all of a sudden you're like, boom! You put that into your portfolio, winner, winner, chicken dinner, and you got that 5% income. Okay? And that's part of your portfolio. And all of a sudden, like, dude, that's when you're guaranteed that, pretty much guaranteed, that 3%, because it's in a contract, you're like, sweet. But it's private. Aha! And you're like, Wayne, that's not fair. Uh-huh. But you still need to know how to trade. Huh? Isn't that cool that that kind of stuff exists as a Forex trader? It was amazing to look at some of those structured deals, and you're like, dude, this is what some people do? Uh-huh. Okay. Okay. What do you think? That's the bullish move, and if that's the week we're going into, companies are going to report well. Okay, that means if this is true, what I just drew here, okay, I would do things like short dollar. I would be long gold. I'd be long Bitcoin. And I'm like neutral to long on oil. Now, the reason I say that is we're right in the middle of the normal level of oil in inventory. I understand there's some seasonality that suggests long. That's why I say, in a risk-on moment, buying oil doesn't sound like a bad idea, in particular this time of year based on seasonality. But we don't have a shortage of oil, but we don't have too much oil either. We have, we're talking about, this porridge is too hot. This porridge is too cold. Okay, but this porridge is just right. Yummy. right? We just have, it's perfect. So I don't have to be bullish, but if the market was bullish anyways, yeah, sure, let's be bullish, right? So we do it. We go. No, you would not long yen. You would sell yen, which means you would go long yen pairs. Okay, Bumpy? Now that's what you might have meant, but that's not what you typed. Okay? So you would look at your my WTI and say, if the stock market is up today because of positive earnings growth in the United States, in particular, like I said, Coca-Cola reported, but like we have like Google and Apple and Amazon and Meta and more, I think, all this week, you know, I mean, a lot, right? Like big, nazi companies. Okay. Big, nazi companies reporting this week. And if we're on the free and clear plan, no recession this quarter, then this is right. This is up. Now, one of the things I pointed out for oil quite some time ago, actually, is like this idea it could drop one more time before we get the up. Okay, which is the same version of the old trade, but we would have to worry about the head and shoulders on that, but that's probably not this week. But nonetheless, if the stock market's up on decent earnings throughout the week, then either this week or next week, oil goes up. Okay? But that's a macro aggregate play. Remember, macro is looking at big picture. So if that same scenario, like I said, earnings come out and they're just pretty decent, there's no recession now, then we might end up buying dips on gold. We're eyeballing whether we can get back above 2,000. Okay, and this hesitation here is just because of the all-time high on gold. So this is a daily, but notice I have a daily zero lag. The zero lag says long here and exit here, and not long yet. Okay, Spencer says yes. Richard Spencer says yes, we have GDP. Yeah, I think there's also PCE. PCE mean more important. GDP, how well did we do last quarter? Is that what we care about right now? Okay. So let me make a point, the same point in a different way. Do I still have? Lovely. Oh, yeah, this one. Okay. Look, the point I'm making is June 14th is what we're concerned about. So how much should we care about last quarter's productivity? You know what I'm talking about? You're like, last quarter's, right? Last quarter's GDP. No, but that's not, we don't care. That's not even the question, right? Like, nobody cares. It's important data in context. You can't just look at all the data in the world, right? Everything's in context. Okay? We're looking at things like, are rents falling? Not yet. Is the economy losing jobs? Not yet. Is inflation dropping below 5% or 4%? Not yet. What happened 3 months ago? Irrelevant. We're all focused 3 months ahead, not 3 months behind. And so in that context, it doesn't matter, right? It's not the concern. So if it came out and you're like, oh my God, look, you're either going to use it or not. Like if you're a bull and then GDP comes out and it shows like pretty decent growth and you're like, oh my God, that just proves I'm right. Well, whatever. You're right. It's confirmation bias. You're either going to use it or you ain't going to use it. So, yeah, that's all. I'm trying to say we want to be forward looking, not backward looking. And that's the problem with GDP. So PCE, more important. Now to get an idea of how to look at PCE, you should go to youtube.com. Lovely. With your smile so worn and your teeth so green. This one. Okay. This is CPI year over year, CPI month over month, core CPI, and super core CPI. Now, when you look at PCE, you kind of just want to do the same thing. Remember, it's just a better managed basket of goods and services. So I'll pop this in here for you, for y'all, all y'all. PCE is just a better managed basket of goods and services than CPI, but the same idea. Look at supercore PCI. Supercore PCE, and you will be analyzing inflation just like the Fed. We have a Fed meeting coming up, and the Fed's in blackout period, so you're not going to hear from Fed officials, so you'll just have to do your own work when PCE comes out, and I don't remember if it's this week or next week. Okay. Now, Richard says, if positive, the Fed will not cut. Well, what do you mean by positive? Oh, it is Friday. Thank you, everybody. Okay. So anyways, you need to make some decisions. What time frame would you trade this? So on and so forth. Okay. So if I wanted to be a bull on gold and I wanted to look at it for more than a day, right? We love trading, right? Some folks can't imagine owning gold for more than 3 hours. So what if you wanted to be involved on a gold trade longer than 3 days? It's plausible. One of the things you could do is sit here waiting for a 2155 cross up, which means it would take you probably, this would need to occur for that to happen. It would need to make a higher high, and then it would need to make a higher low, and then it would come up to here, and then your decision is, can you, if you've been in it for a day and a half to 2 days, which would be then Wednesday, Thursday, do you hold into next week and see if we make a higher high above this area, approach the all-time high, and hold it beyond? Fancy way of saying, is your target $50 on gold or $500? Okay. Are we going to go from 1980 to 2030, or are we going to 2,500, an all-time high? Are we going to 3,000? Okay. And when I say macroeconomics, here's your big decision. Let me go back to a daily chart. Your big decision, the only decision really all of us need to make strategically, is this coming down back to 1,800? Remember, I'm trying to get you to think quarterly, right? Okay. Is that what you think will happen? Well, you'd have to have rationale for it. Or do you think, okay, that this is going to hold? Okay. And you're a bull, so this is going to go, let me do it with arrows now. You think this. That's just simple strategy. Or do you think this? To me, that's the only decision on this chart. One of you is right. Okay. Now, the way I believe you should use technical analysis, first of all, you should understand that these are the two things that are going on this chart. Okay, great. And you can argue the same thing with the stock market and the bond market and whatever, dollar market, right? Yen market. It all comes down to this same thing. When it's macroeconomics, it's the flow of capital for aggregate reasons. So this is gold. This is everything. It's the one decision. So if you were bullish here, you're not really that frightened that this drops down to 1950. Maybe even 1900. It could go even a little bit lower, and it doesn't really change anything technically. You won't like it, but you're like, okay, I'll buy it at 1900. Then we will make a rally to the all-time high, and then we'll see if we break or not. But you're a bull, and you could thread the pearls and say, here are the bullet points of why I think we have global macroeconomic expansion or persistent inflation. Remember, you want to own gold if there's persistent inflation. Cool. Then that's what you think, and you would set that up. And that's how you use technical analysis. So you sit here and you're like, you're a bull. And now you look at the four-hour chart, let's say, which is still a strategic chart, and you say, is it bullish now? No. 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 Then if you do that 5 times a day, over the course of the next 3 weeks, how much money do you lose if it never turns bullish? Nothing. Well, guess what? That consistent behavior has rewarded you. Not investing was an active decision, not a reactive decision. You shouldn't. I don't want you to be a reactive trader. I want you to be able to plan in advance. Okay? And then one day, it does turn bullish, so you buy the dip. Sweet. You will probably, because it's now bullish, probably will make money because the markets love to trend. So if it reversed and you bought a higher low and you have 5 or 6 reasons why gold should go up, well, you're probably okay. The probability of success is reasonable. You're like, oh, you're probably okay. Now, if you're a bear and you log in and you look at your chart, is it bearish? Yes. Sell the rally, right? Sell the lower high. A day or 2 or 3 goes by and you look at your chart again. Oh, yes, lower low. Great. I'm going to sell the lower high. Then it makes a lower low and you're like, great. I'm going to sell the lower high. Then it makes a lower low and you're like, great. I'm going to sell the lower high. Then it makes a higher high and you're like, give me my money back. In particular, at a reversal pivot, give me my money back. And you're out. Yeah. Okay. So I want you to first and foremost think like an investor, but then act like a trader. Lovely. So like Kiwi's a dog with fleas, right? I don't even have a Kiwi profile, but you can do Aussie. You can make this Kiwi and then save it. Okay, but you can see right now, Aussie is even weaker than Kiwi. So the way I teach you is if you have mixed analysis on like dollar pairs or yen pairs, you do cross pairs. And so one way of doing that, or it doesn't have to be mixed really. Let me start back. I just want to make sure we're all in the same clue train here. Okay, you look at this and you might say, okay, dollar's weak, which is good. Remember, we predicted that. Back in March, we predicted dollar weakness. Anyways, we're weak, but we're at support, you see? And you're like, well, we might hang out here for a while. Huh. Okay. It's a challenge, right? Maybe it doesn't go weaker. Okay. But what is happening? Well, you could then focus and say, well, if you're kind of like short-term neutral on dollar, well, dollar figures out what it wants to do at support. Well, you could just focus your efforts now to either just buy in euro. So you're like, okay, I want to buy euro, sell Aussie. I want to buy euro, sell Kiwi. I want to not trade euro pound. You'll get mediocre results. Maybe you can trade euro CAD because CAD seems weak, but then you're like the US dollar, it might be weak, but it just in the next few days might be a little choppy. So you're like, nah, maybe next week, okay? And you're making all these decisions. That's how I want you to trade, not just cycling through 30 or 40 charts. If you cycle through 30 or 40 charts, you will find a trade, but it's probably mediocre because you're not making a decision. You're just looking. I mean, confirmation bias alone will just make you trade a pattern, but not anything logical. So I'd rather you say, okay, I want to buy this. So, right? So I'll sell that. And I'll skip that. I'll skip that. Yeah, you could. Yeah, it's so weak. So you're like, okay, yeah. So you might like buy Euro Aussie, buy Euro Kiwi, buy Euro Yen, skip this, skip this, skip this, skip this. And then you open your charts. If you watched the presentation I did, how to triple your trading profits without changing your technical indicators and spending less time in front of your charts, right? How many people saw that presentation? How to triple your trading profits without changing your technical indicators and while spending less time in front of your charts. It's a long title. How many people attended that? One of the things I showed you, I reconstructed the process that I started trading Forex with. Okay? And it was my first quantitative analysis strategy, actually. I didn't know it at the time. But we're talking about what, 2001, I suppose? 2002? And I would look, and I reconstructed it. I showed the spreadsheet. I did it live, and I showed you the numbers and all that kind of stuff. And what I ended up doing every single day, it was essentially what I'm showing you now, where I look at it and I'm like, okay, I want to buy this. I am not sure about this today. I don't want that. I'm not sure about this today. And I don't want that. So, now what? Okay, so I probably want to do some euro. And that's a sell, that's a buy, that's a sell, and then sell, and then, yeah, that's probably okay. It's getting close to support, but whatever. And you're like, so I'm going to look at, okay? And then I literally had a piece of paper, by the way. I organized this every single day. You know, this is back when Kinko's existed. Okay? So I had this form. I'm not even joking. I had this all printed out. I would do the math. And the form I printed out into like 365 pages. And then I had them glued together like a notepad at Kinko's. So I literally had a notepad. But so I would go through all of this and I would analyze the spread and the overnight volatility and all that kind of stuff. But what I'm getting down to is I would get to this point where it would say, I want to buy euro, okay, but sell Aussie, Kiwi, and yen. I haven't even looked at a chart yet. And that's the biggest distinction, I think. When I look at the youngins these days, okay, I think that's the biggest difference. Because I'm certain 99.5% of new Forex traders don't do anything like that. They go to the chart first and they go look for trades. You understand? And so a million years ago, charts were not a prerequisite for trading. You really have to understand that concept to understand maybe how Wall Street actually works. In fact, people would laugh at me because I did talk about technical analysis. I would talk about a moving average and get laughed at. I would talk about a MACD and get laughed at by professional investors managing hundreds of millions of dollars. Okay? Honest joke. Like, no joke, honest truth. So anyway, so I'm still trying to teach you. Oh man, I got a dump truck arriving. They're early. Well, screw them. They're going to have to wait. I'm not done. This is where I'm still trying to get you. This is still what I'm trying to teach. Okay? That you are doing some sort of intellectual analysis, okay, first. So, like, you're not even interested in CAD. I don't want to look at it. You're not even interested in Swiss franc today. Don't even want to look at it. You're not even going to look at dollar today. Well, what if it does something? Well, then you can plan tomorrow, but not today. You're not even interested in pound. You're not even going to look at it. Well, what if it moves? You're not interested. It's irrelevant. You understand? Irrelevant. Let someone else have it. Okay? Cool. So now you're like, I might buy Euro Aussie. I might buy Euro Kiwi. I might buy Euro Yen. Cool. Decisions are made. Okay? Decisions are made. And now you go to it. Now you go to work. And so you pull up that Euro and you're like, okay, Euro Kiwi, maybe. Euro Swiss franc, not interested. Euro CAD, not interested. Euro pound, not interested. Euro Kiwi, yeah. Oh, we got that twice. That's right. I forgot about that. So I'll kill this one. Euro Aussie, yeah, maybe. Euro dollar, not interested. But we were interested in Euro Yen. So maybe Euro Yen. This one. Boom. All right. So you might buy one of these three things. What about selling opportunities? What if it turns bearish? What if the MACD points down? What if the moving averages point down? What if the stochastics points down? You're not interested. Okay? And that's how you should have looked at this last night, for example. The other thing I've taught you is New York is over. Like, you shouldn't log in to the New York Open and start something new. This period is about taking profit. The trade you're in now should have been planned last night. That's why the day trading group meets at the close. Okay? Okay? And now the cool thing is quantitative analysis of these trends, okay, had this move pegged a long time ago. These trades have been going for weeks now. And with proper quantitative analysis, okay, I believe, like, I already looked it up, like this Euro Kiwi. Okay, this last move was planned March 22nd. Quantitatively, March 22nd. So somewhere in here was the buy. When the quantitative analysis of the market suggested that fundamentals and technicals have put together bullishness. Now remember, it's fundamentals and technicals. So the fundamentals didn't change in this period. What changed? The technicals. So the technicals in here put you neutral because for a whole month we didn't make a higher high. And then on March 22nd, whatever, something happened. So here's the 21st, here's the 23rd. So in here, we made a higher high. So now your fundamental analysis of we have a higher high in a fundamentally bullish scenario, I need to buy the dip. On the 22nd? No, not necessarily. Maybe. You could have bought it here or you could have bought it here. And then, of course, oh my God, that's what pivot points are for. Killed it, crushed it, nailed it. I'm smoking hot like fire. When I turn, you desire. I'm fresh in you because you white. I ain't lying. I ain't dying. Up to number one is where I'm flying. Yes, Rob Base. Yes, you're looking at it. Yeah, Rob Base. You nailed it. So anyways, yeah, that's what I want for you. I wish I can just give it to you. My gift to you. And you accept it. And now that's what you have. But obviously it takes a long time to learn it. You got to learn it to earn it. I can't gift it to you. Okay? Now Richard's like, oh, the euro pairs are up at the moment. Yeah, but now we're hitting targets pretty soon, right? So, yeah. So my point is, well, there's a way to figure these things out. Okay, logging in, burning through a bunch of charts, and finding a trade on a 15-minute chart is very short term. That's all I can tell you. In multiple meanings. Okay. So anyways, I gotta go, yo. Peace on earth. Peace on earth. May the pips be with you. May your profits be above average. I'll see you at the Wall Street close if you're in my day trading group. Okay? And Darko, it's really good to see you. You've been a stranger lately, man. Good to see you. Don't be a stranger, bro. So I'll see you at 4, everybody. See ya, see ya, see ya. Yep, there you go, Brian. Boop. Brian, you can get into Quant-in-a-Box again, right? I think I asked you last week, but I think I missed you. You're probably already gone now. I just want to confirm, because you sent me an email, and then inside the email on a different subject, you're like, I can't log in, by the way. I'm like, so I just want to make sure if you're still here, we got that all sorted and fixed. He's gone. And he's gone. Yeah. All right, everybody. Man, what a great day, huh? That was real.